Ever wonder if the money you're holding with a fintech company like Relay is actually safe? We've all seen the headlines about bank failures, and it's a valid question. The name Relay Bank is common, but here's a crucial piece of information. Relay is a financial technology company, not a bank itself. So, how does that work, and is your money protected? This is where the FDIC comes in. The Federal Deposit Insurance Corporation is an independent agency of the U.S. government that protects depositors in case of bank failure. The standard FDIC insurance covers up to $250,000 per depositor, per insured bank, for each ownership category. But since Relay isn't a bank, it has a partnership with one. Relay's banking services and FDIC insurance are provided through its partner, Thread Bank, which is a member FDIC. This is a very common and legitimate model for modern fintechs. The important thing is that your funds, while managed through the Relay platform, are ultimately held at an FDIC-insured institution. Now, for the big question, how much coverage do you get? Through its partnership with Thread Bank, Relay offers an expanded FDIC insurance program that can cover up to $3 million per business. This is achieved through a cash sweep program, where your deposits are automatically distributed across a network of FDIC-insured program banks. Each of these individual banks holds your funds up to the standard $250,000 limit, providing you with a much higher total coverage. So, to answer the question, yes, your funds with Relay are safe. The company uses a well-established and secure model, partnering with a regulated, FDIC-insured bank to ensure your money is protected far beyond the standard limits. With that said, thanks for watching, and until next time.